Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're going to do a quick recap of the wild week in cannabis that was from February 8th to the 14th. Now, before we jump in, if you enjoy this video or you learn something, please just leave a like on the video as it really helps out my channel. And then, of course, if you think this industry is going to be big, definitely subscribe so that you don't miss any new videos, but I would recommend going back and watching episode 3 and 4 of Reality Check Cannabis in 2020, and then you can get caught up to all the developments we've seen watching episodes of This Week in Cannabis up until now. But as we jump in, this was my portfolio Wednesday morning after the big steady climb, and then this was it Thursday morning. And it was funny because Wednesday night I finally realized, hey Jordan, remember that plan you made in 2020 that if Afria got to $25, you would sell 500 shares so that you have enough cash to pump back into Cresco and other MSOs? Oh yeah, well, unfortunately I'm human too, and I got caught up in the hype because with all the momentum changing around us and the positive sentiment toward cannabis, this got me very excited. But again, it was a reminder, and instead of kicking myself and being down on myself for the opportunity that I missed out on, instead I decided to adjust and adapt. So if you stick until the end, you'll be able to see what I plan to do going forward. But I just want to point out that I did a lot better than I did in 2018. I did end up selling 200 shares at 15 on the way up just because I didn't want to miss out on the opportunity to lock in profits and not be greedy. And then I did sell 100 at 23 and 100 at 30 and then again 100 at 22 when it came down last week, and realized just like me not selling is just being greedy and hoping it's going to keep rising, when realistically all I need is the cash to put into these MSOs. And I can do that right now still. So stick around for that. But let's jump in because, yeah, what a ride. This just goes to show that you need to have a plan and you cannot get caught up in the hype. Because if you're new here and you get in this week, you think, oh my God, what do I do? I bought up here and now it's down here. You need to chill. Because if you're new here, you need to understand that this game has been played for a long time. And, a lot of what was today, or a lot of what we saw these past few days, is people like me who got in at $5 and $10 taking healthy profits, because that's how you invest successfully. So if you recently invested and you're not sure what to do, just chill, but figure out why you invested in the first place. Educate yourself, do a bit more research, and that will make it a lot easier. And again, just to show that the US, similar thing, not nearly as big of a sell-off as we saw in Canada, but again, if you got in early, like a lot of people did, you're seeing people taking profits and early investors taking profits. So if you're an investor getting in now, you want to hold long at least 2 years, because you're going to be eventually then able to take profits in time when new people try to get in and take advantage of the legalization rush. And again, this is early, folks. You want to get in early. And that being said, yes, LPs, the higher the share prices and market caps of Canadian LPs go, the more expensive they become. And that's why I'm not investing in any more Canadian LPs. I have my position in Afria at 564, and I'm happy to sit there and grateful for that. But this is why I want to turn your attention now to the U.S. multi-state operators, and we're going to hear from some professionals. Sorry.
But in general, we believe that you want to put your money in U.S. operators and not be buying and chasing these Canadian LPs that are trading at insane valuation.
And which these means he's actually short on these companies, expecting the price to decrease because, again, it's just not aligned with the fundamentals and the revenue numbers.
If those Canadian names do pull back, do you think your US names will suffer as well, providing...
And again, long on these US multi-state operators, Green Thumb, Cureleaf, Cresco...
a good entry opportunity to them, and which are some of the names you're long and you like?
Yeah, so today you saw a little bit of a pullback earlier in the day, and you just saw a wall of money coming into the space. I think what you're seeing, and you saw this with Green Thumb Industries yesterday, you're seeing huge amounts of institutional capital come into cannabis. Compliance officers are more comfortable with it.
Especially
and
the
we
MSOs.
believe companies like Green Thumb, Trulieve, Cureleaf, Cresco Labs, Jushi, which are extremely well positioned as states like Virginia, New Jersey, Connecticut, New York, all of which are starting the legalization process. And these are the companies that are actually going to benefit, as opposed to the Canadian LPs, where you're just buying some hope that somehow, some way, they're going to find a way into the United States.
And now, again, you are buying that hope. And the fact is, we have more hope than ever before because the Dems have claimed that federal reform is a priority this year. But again, MSOs are already executing in the U.S. U.S. cannabis sales in 2020 are going to hit about 18 to 20 billion versus Canadian cannabis sales of just 2.6 billion. So just wrap your head around that. I've been saying it for weeks, but hopefully this really helps you understand it. And another one from Boris, who is the chairman of Cureleaf.
or explain the run-up we've seen in the last, say, week or two?
Well, I think you need to separate the situation with stocks that are trading on the big boards in the United States, and those are largely Canadian companies because they're federally legal in Canada and therefore allowed to trade on the U.S. exchanges, whereas the U.S. companies that have their exposure to the U.S. market, which is the biggest cannabis market in the world, trade actually in Canada.
Greater margin of
safety.
So
if you take a look at what's going on through the Reddit trade in the U.S., yes, you have a lot of shorts in those stocks for good reason. A lot of those companies have not performed well. I mean, yes, this week we saw Canopy announce almost $1 billion loss, $850 million loss, and their stock was up almost 20% in the back of that. That has largely to do with chasing shorts, and that's what Reddit's been doing, very similar to what happened in the GameStop situation. If you, however, look at the U.S. companies, which have benefited from obviously this short trade as well, but those companies have very few shorts in them, and therefore they trade on a much more stable basis, and they represent the bigger part of the market. And it's the irony is that U.S. companies that operate in the biggest cannabis market in the world cannot trade in the U.S., whereas Canadian companies, which represent a very small piece of the cannabis industry, can trade in the U.S.
Yeah, so it's fascinating, and so it's so important that a margin of safety is, if I want to invest in something, I don't want it to go down, I want it to have more upside of going up. These MSOs have more upside of going up, whereas the LPs, because they're expensive, have more upside of going down. Again, Canopy, they lost $856 million and they're still valued at $16 billion. It doesn't make any sense. But so again, cannabis CEOs targeted by Reddit push back in a tweet storm. Now, this was something fun to be a bit of a part of called the MSO gang, but basically it's educators on Twitter trying to raise awareness between the difference between Canadian LPs and MSOs. And the hashtag has shown up on profile pages in recent days of heads of many cannabis companies: Cresco Labs, Charles Bachtel; Curaleaf's Boris Jordan; Green Thumb Industries, Ben Kovler; and Truliev's Kim Rivers. Now, Jordan declined to comment through a spokesperson and other executives, but basically they're just like Jim Cramer even saying, there's no blue chip pot stocks, and I'm sorry it's not a huge industry. It's not good, or it's a good, not great industry. Lots of better ones out there. Jim is just not paying attention to MSOs, and he's feeding into the narrative the media wants him to feed into, not what's actually the reality, because it's all about the consumer. I believe cannabis is the next great American growth story, as do I. It's wonderful that so many people still don't see it, because it's better for us, more opportunity for us to buy cheap shares. That's what makes it a market and what creates the best opportunity. Buyer beware. And I just want to point this out, referencing the Todd father, Todd Harrison, one of the guys that I reference quite a bit, but and again, to Jim Cramer, I disagree. I've run a pharma fund for over 20 years, never before more concentrated in one sector than I am in cannabis right now. Over 80% of my 2.2 billion fund in these, in these names. So I'll just exit that. But yeah, it would be my pleasure to give you a 15-minute rundown. And so just to say with the Canadian LPs, if you're going to dare to buy one for the long term, Afria. That's the only one that has upside, whereas the other ones are just so expensive in terms of their price to projected future sales in 2021. But this is just an amazing chart here by Justin, young Justin on Twitter, one of the OG again, cannabis investors on Twitter that does his own due diligence. But if you compare it, just a few different things. Market cap wise, Curaleaf is the largest at 15, whereas Canopy's at 16. And you've got a lot of them trading at around 7 or 8 million Canadian market cap. But if we just take a look at the last quarter revenue for these, so this is the money, the amount of money these MSOs brought in last quarter, most of them over 100 million already, for a total of 713 million just last quarter alone with these main top 6. And then if we look at Canada, the main top 6 down here brought in just 410 million. So these US MSOs have almost doubled the revenue. Mind you, a lot of these Canadian LPs are still more expensive. And the other few things that I just want to point out is that if we look here in 2021, only one Canadian LP is going to be profitable, and that will be Afria. And if we look here, even at 2021 earning per share estimates, every single MSO will be profitable. If we look at the revenue estimates for 2021, Curaleaf will be over $1 billion, but like Cresco, Trulieve will just be 800 million. Still fantastic, especially when they're cutting costs and becoming profitable. But by 2022, they're all going to be over $1 billion. And again, I think a few videos back, if you saw Zoom Inc., the company that does the video conferencing calls, they're valued at $125 billion. and they only made $600 million revenue in 2020. So just the potential upside is massive, especially when these companies can uplist. And again, when you factor in the how you would value other companies on big U.S. exchanges at a 22 times earnings multiple, then we just see a 3 times upside in Cresco, or double upside with TerraSend, mostly double, sometimes triple upside, and then we don't know how much future growth will get priced in. But this just goes to show, again, MSOs all the way, folks. If you have cash to put in and you're not sure and you can't hold that long of you can't hold 2 to 5 years, MSOs are where the upside is. Now, just to dive in deeper to a Canadian cannabis company, for example, Aurora Cannabis announces fiscal Q2 or second quarter earnings. If we actually jump into their sales chart, look at this. So from Q1 2021 to Q2 2021, their consumer cannabis sales in Canada went down 5 million. So if you're investing in a company that's losing market share, quarter over quarter, their market share is not going up, you want to take your money. You do not want to be invested in that company. And legit, yeah. So in the last quarter, Afria's revenue's gone down because their brands are not selling. And again, the top brands in Canada are just eating up the market share, and companies that are not going to compete are just going to have to consolidate, come together, or go bankrupt. But just to show that literally their medical revenue went up by 5 million, 16%. But if your adult use market, the main market in Canada, goes down by 17% quarter over quarter, oh my gosh, you are in big trouble. So that's just something to point out. And early surprise, Tilray has announced that they're going to release their full year fiscal Q4 earnings on the 17th, Wednesday evening after market close. So this is about 5 p.m. This throws a curveball and is really why I adjusted, because, I mean, fundamentally, if these are good, there's a good chance we will see these prices rebound a bit. If they're not good, there's a good chance we might see them go down a bit. But fundamentally, I just realized that where I'm sitting, I don't need the price to go up or down anymore. I can adjust. But just want to point out, though, because Tilray, that this is their transcript from their Q3 earnings, and just to reference their CEO, we are encouraged by our progress in Q3 as we substantially narrowed our adjusted EBITDA loss compared to both Q1 and Q2. Now, based on our Q3 results, we believe our current momentum positions us to achieve our goal of break-even or positive adjusted EBITDA in Q4, and that's what they're going to be releasing Wednesday after the market close. So as we've stated now throughout 2020, this has been our objective, and we're clearly within reach. So I'm not positive, but I have a feeling that they might announce this, and because they have reached profitability, or at least EBITDA profitability, based on what they said here, which would be great. And again, that's what U.S. investors would look out for, and we might actually see a bump. But again, I don't want to risk them not having profitability, seeing the price fall, and me not being able to execute on my plan. So just wanted to show you that again. So although this week looked as if, if you got in mid this week and then you see it fall down, it looks like the world is ending. But no, once all this Trump impeachment crap is done with, cannabis is going to be back in the headlines, just as they have been. Connecticut governor includes cannabis legalization proposal or plan in budget proposal. Now, although legislators and lawmakers are definitely expressing concerns about specifics, this is good to see that the intent of the Connecticut governor who said that after New Jersey was going to legalize, why don't we take advantage of this tax revenue? So they're putting their plan out there, putting the intent out there. That's massive. Now, Minnesota cannabis legalization bill gets first hearing next week. This will receive its first hearing and then likely a vote. So again, it's just good that these states that see the opportunity are moving forward, unless they're delaying. New Mexico lawmakers debate cannabis legalization bills with vote planned on Monday. So right there, that's 3 states that, regardless of what you're paying attention to, are effectively moving towards state legalization and state reform, which is great. Illinois, after all is said and done in 2020, and without a doubt, when you open up a new industry, there are always going to be growing pains, and you're going to have to adjust as you go. But Illinois collects $205 million in cannabis taxes from first year of legal sales. Now, it depends what they do with this, but that's a lot of money that they didn't have last year. And this is positive regardless for the people of Illinois, for infrastructure, schools, programs. Hopefully it gets used well, but this is the whole idea. If we can legalize it and then use the funds productively. Now, this is a very interesting video clip to mention from the Hill. I'm just going to play it and let you watch, but this is new information and very interesting twist.
And Jim, talk about the federal level, because, states are able to basically do what they want. Federal government looks the other way. But what has Biden pledged, and what could he actually take action on without even having Congress?
it's a very interesting question. One, while reading the Controlled Substances Act, it appears as if the president, through the attorney general, can remove any drug from the controlled substances list if the attorney general decides to. That's not something that the Obama Justice Department decided to do, but it seems like it's on the books that it could be done that way. But the good news is we might not have to see if the Biden administration will go that route. There seems to be some significant work being done in Congress, especially on the Senate side, that looks like this could be a priority this Congress.
And that's what Congress said, right? They deemed it's going to be a priority. So we just have to trust and just stay patient. Know that the sky is not falling after that last week. And remember that, hey, Curaleaf celebrates grand opening of their 100th retail location. And then after this in Florida, they actually celebrated their 101st retail location in Maine. So, despite the fact we don't see these companies on the news because they're in the U.S. still dealing with a federally illegal narcotic, although they're thriving in states where it's legal, they're still pumping along. Trulieve opens their 3rd location in Jacksonville, their 79th nationwide, and Vireo opens 2 more green goods cannabis patient centers in Twin Cities. And that, again, this is ahead of Minnesota potentially potentially coming out with reform. So just big for these MSOs that just keeping their head down and executing. And cannabis topicals make big gains around Valentine's Day. Beverages and edibles see a bump too. Now, this is quite interesting, but I wanted to point it out because most of the sales tend to come in flower and vapes. So it's good to see other product categories getting some love based on the holidays, people wanting to try something different. So that's awesome. Just got to point out massage oil and lube. Yeah, baby, CBD-based or THC-based up 115%. It's just, that's hilarious. But just want to send the love out there and just show that, hey, things are good despite what it could appear to look like on the outside. And so we're going to jump back to my portfolio, and this is what my plan is. So I just want to point out I was reading this really good book this morning, and or over the weekend, it showed me when it comes to investing, much of the game is simply not messing things up. Without a plan, it is easy to change the strategy midstream. Oh no, I'll just hold longer and hope it keeps going, increasing the odds of messing everything up. Ignore the noise, never panic, don't change plans in the middle of a crisis, and stay focused on your goals. Now, this is not a crisis, but I'm just adjusting because I missed my opportunity beforehand. So, I have still significantly increased the amount invested, showing that this industry has promise. And I'm sitting on $4,400 in cash right now. And so what I figured out that I can do is if I sell 500 more shares of Afria at $22.56, and I believe based on the volatility that this week, in the next few days, I should be able to sell shares at that price. If I don't, I have already done the calculations that if I need to sell it at $22.51, which is a cent above where it closed at, I can do that too. And I'll just have a little bit less money to put into Vireo. But my plan now going forward is to sell 500 shares at $22.56 so that I cash out $11,280. I want that cash to combine it with the $4,400, so then I've got $15,710 to play with. So what I do, so that is the first step. Once I have that money, then I'm going to buy 562 shares of Cresco Labs at $19 for $10,678. And then so that 562 on top of the 475 shares I already own is going to give me 1,037 shares. And then I can combine this with the previous book value I've invested, which is 7,811, which will give me a new Curaleaf book value of $18,489 and a new average price. Take that total book value divided by the number of shares you have. My new average price is going to go up from $16.44 to $17.82, but that's okay because anything under $18 I'm extremely happy with. So that's going to be my second step. And then the third step, whatever is left, but hopefully I can execute this as said. I will buy 12,700 shares of Vireo at $3.95, hoping that it goes a bit below. And that will cost me $5,016. And what that will do though is I can add that 1,270 shares to 450 shares, for a grand total of 1,720 shares. And if you add to my current book value of 1,650, a very small amount, adding this will actually give me 6,666 shares, which I think is just bloody awesome, and a new average price of $3.87. And then I'm already happy with Harvest. I'm set in there. I don't need to touch it. And this is all I need to do for 2021. And then I'm golden. And basically, I'm going to treat every other investment like Afria, which was the foundational sort of play. And it's like, okay, so if I can invest this, find an undervalued company at a cheap price, wait for it to increase a large amount, and then sell back the amount of cash I invested in the first place, then I can reinvest that into new opportunities so that when Cresco eventually hopefully doubles to 40, I can sell a good portion, maybe 400 of my shares to get my original cash back. Same with Harvest, same with Vireo, and then I just rinse and repeat and do that. And that, folks, is ultimately the strategy to make more capital with the tax-free capital you already have. So just to finish this off, this book was The 5 Mistakes Every Investor Makes and How to Avoid Them by Peter Mallouk. Please send me an email at makemorecapital@gmail.com and I will send you the PDF because it was a great book. And just to recap, A Path to Success, Intelligent Portfolio Construction, avoid market timing, instead invest for the long run, and I'm invested for the long run. So again, I got to stop hoping it's going to go up and just execute my plan, what I'm comfortable with. Avoid active trading, buy mostly passive investments. And I don't actively trade, but I do make adjustments so that I can passively sit and let the money grow for the long term. And I mean, fundamentally, the less trades you end up making, the better. Because the more you try to adjust, the more you can end up making mistakes. Now, don't fall for performance claims, get scared by the media and the like. Tune out of the noise. Focus on what you know. Don't get in your own way. Be aware of your behavioral biases, what I was just aware of. Recognize them when they appear and control them. And that's exactly what I've done to just readjust my plan and then build a portfolio with asset classes that make sense for your situation. I know cannabis, and this is why I couldn't be happier with my new adjustment, and I just plan to execute next week. And once I do, again, I'm set for the rest of the year, and I just have to watch and continue providing this awesome, valuable content for you folks. So again, don't forget the upcoming catalyst. We've got MSO Q4 numbers being released in March. We've got the Safe Banking Act, which is likely going to pass because banks are even lobbying for it. They want to be able to invest in these undervalued companies. And then the MSOs are going to, again, release greater earnings in Q1, and then federal reform at some point. That is what we've been told. So hope you enjoyed this video, folks. Let me know in the description if this was valuable. If you have any suggestions about MSOs or LPs, let me know your questions down there. Let's have a discussion, but please leave a like if you enjoyed this. Subscribe so that you don't miss any more, and I'll catch you next week for Midweek Update. Have a great day, everybody.